Las Vegas, a city built on dreams, on the shimmer of light, and the sound of dice hitting felt. But beyond the casinos, the flashing billboards, and the tourists filling the strip, another story has been unfolding quietly, a story written in real estate listings, mortgage rates, and price tags that are starting to fall. For years, Las Vegas symbolized growth. Booming suburbs, record home values, and bidding wars that made national headlines. Now, as 2025 closes in, the market that once felt invincible is showing cracks. Home prices are slipping, inventory is rising, and the optimism that once fueled this city's housing boom is being replaced with a growing sense of caution. According to the Las Vegas Realtor's most recent data, the median price for a single-family home in southern Nevada has dropped to $470,000, down $10,000 in just 1 month and marking the lowest point since April 2024. It's a 2.1% decline from last year's level of $485,000, and a subtle but telling shift for a market long defined by relentless upward movement. Condo and townhome prices have also fallen, now sitting around $294,000, a drop of about $4,000 compared to just a few months ago. That might not sound catastrophic, but in the context of a market that's been red hot for years, even a small slide is enough to make buyers, sellers, and investors take notice. Behind these numbers lies a deeper story, one about shifting demand, higher borrowing costs, and changing psychology. Mortgage rates in Nevada have climbed to an average of 6.3 to 6.5%, according to Bankrate and Redfin data. That's roughly double the rates buyers enjoyed during the pandemic boom, when money was cheap and competition was fierce. Now that competition is cooling fast. Las Vegas realtors say 7,500 single-family homes are currently sitting on the market without offers, a 37% jump from a year ago. For condos and townhomes, the picture is even starker, with listings up more than 50%. In simple terms, there are more homes than buyers. To understand how we got here, it helps to look back just a few years. Between 2020 and 2022, Las Vegas experienced one of the sharpest home price surges in the country. Remote workers flooded in, investors bought entire neighborhoods, and demand outpaced supply so drastically that bidding wars became routine. A home listed on a Monday could be under contract by Friday. Cash offers, waived inspections, and escalating prices were the norm. But as interest rates climbed and the economic sugar rush of low-cost loans faded, the foundation beneath that boom began to shift. Today, that shift is visible across the valley. Pending sales, the deals waiting to close, have fallen sharply. Redfin reports Las Vegas saw a 17.7% drop in pending sales earlier this year, ranking third in the nation, behind only Fort Lauderdale and San Jose. At the same time, Las Vegas registered the highest growth in active listings among the top 50 U.S. metros. Economists call this the market turning. Buyers have pulled back, sellers are hesitating, and prices are beginning to respond. Redfin's senior economist Asad Khan calls it a weak home buying season, noting that even though sellers still have significant equity, demand has evaporated faster than expected. The median single-family price, once sitting confidently at $485,000, even brushing record highs at the start of the year, has now plateaued or declined across most zip codes. And experts believe it won't stop there. Redfin predicts that the second half of 2025 could bring further price drops as more inventory floods the market and buyers wait for better deals. In their words, Las Vegas has already become a buyer's market, and that balance of power may only tilt further in the months ahead. As mortgage rates linger around 7%, affordability continues to slip away for first-time buyers, especially as wages fail to keep up with rising costs. In many ways, what's happening in Las Vegas reflects a national trend, a cooling cycle after years of overheating. But Vegas has always been a market of extremes. When it rises fast. When it often falls harder. Real estate agents across the valley say open houses that once drew dozens of visitors now go quiet. Homes that used to sell within a week now sit on the market for months. And price reductions, once rare, are becoming routine. Some sellers, still anchored to last year's highs, are struggling to accept reality. But the data is clear. The momentum has shifted. According to Las Vegas Realtors' latest figures, only 72% of homes are selling within 60 days, down from 81% a year ago. That's a significant slowdown, and one that's reshaping how deals are made. More homes are lingering unsold, more buyers are negotiating, and more listings are ending with price-reduced tags instead of bidding wars. The city's housing supply now sits at around a 4-month inventory, compared to just 1 or 2 months during the height of the boom. That might sound technical, but in real estate, a 4-month supply marks the difference between a seller's market and a balanced one. And balance in Las Vegas often precedes correction. Redfin's projections suggest that the slowdown will continue through the rest of the year. Their economists expect price growth to not only slow, but reverse if rates stay near 7%. For many homeowners, this means the latter half of 2025 could become a tougher market, with more price cuts, longer days on market, and buyers regaining leverage they haven't had in nearly half a decade. Yet even amid cooling prices, not everyone is panicking. Most homeowners still hold significant equity built up during the boom years. That cushion has kept distress sales low, at least for now. But the psychological shift is undeniable. Confidence is cracking, and hesitation is replacing the frenzy. Industry voices, like Las Vegas Realtors president George Kipreos, describe it as a reset, a period of rebalancing after years of unsustainable acceleration. He said recently, "We're seeing more homes available for sale than we've had in some time. We're also seeing a more balanced market. This is becoming the best time for buyers to make a move." That optimism has merit. After all, balance isn't always bad. For families priced out during the boom, falling prices and higher inventory might finally offer a chance to buy. But it also means homeowners who bought near the peak may face tough choices, especially if values slip further or mortgage renewals bring higher payments. The ripple effects are already visible. Home renovation companies are reporting slower demand. Roofers and contractors say some clients are delaying projects, waiting to see how far prices might fall before investing more in their homes. The slowdown touches everything, from mortgage lenders to moving companies to small tradesmen whose livelihoods depend on home transactions. In Las Vegas, where construction and real estate are pillars of the local economy, even a mild cooling can feel seismic. The city's history, from the boom before 2008 to the crash that followed, serves as a stark reminder of how quickly fortune can flip. Still, this isn't 2008. Experts agree that today's market, while cooling, is built on firmer ground. Homeowners aren't over-leveraged, banks aren't handing out risky loans, and demand, though softer, hasn't disappeared entirely. Instead, what we're seeing is a correction, a pause in a market that's sprinted too fast for too long. But even a pause can feel painful for those who built their expectations on endless appreciation. By early fall, Las Vegas Realtors reported more than 2,600 homes sold in September, with sales up slightly for single-family properties, but down for condos and townhomes. It's a mixed signal, showing that while parts of the market are stabilizing, others are still losing momentum. Condo prices, in particular, have softened, down nearly 2% year over year as investors retreat and supply builds up. Those properties, often bought for short-term rentals, are among the first to feel the chill when demand cools. So where does Las Vegas go from here? Redfin's outlook paints a cautious picture. If mortgage rates ease, demand could rebound quickly, especially from sidelined buyers waiting for relief. But if rates stay high, the market could see deeper discounts, especially in the outer suburbs where new construction continues to add supply. And that's the balancing act now facing the city, a market trying to find its footing between affordability, interest rates, and investor sentiment. The Las Vegas housing story isn't ending, it's evolving. Prices are dropping, yes, but for many this represents a long overdue return to normalcy. A home market that breathes again, not racing, not crashing, but recalibrating. Still, as Redfin warns, the months ahead could define how deep this reset runs. Will this be a mild correction, or the opening act of a larger downturn? That depends on what happens next: interest rates, job growth, and the confidence of both buyers and sellers. For now, the signs are clear. Homes that once symbolized boundless optimism are quietly becoming reminders of a simple truth, that every boom has a breaking point. Las Vegas, a city built on risk, now finds itself at the table once again, waiting to see if this next hand will bring recovery or another reckoning. Because in real estate, as in life, nothing stays up forever. And this is the real story behind the Las Vegas housing slowdown. If you found this helpful, hit subscribe and ring the bell. For now, keep watching The Roof Matters, because every home has a story.